QSBS. It's qualified small business stock. So if you invest in this qualified small business, so there are some criteria. If it's fulfilled, you will get a capital gain exclusion. Not all the business will be qualified for this benefit. Requirement is the company must be C corporation. S corporation cannot take this benefit. Even LLC cannot have shares, so this will not applicable to LLC also. The second thing is to qualify for small business, the asset value of the business should be less than 75 million before issuance and after issuance. The third thing is whatever asset is there, 80% of the company's asset must be used for active business. Stock that you purchase should be from the company. You cannot buy stocks from any third person. You cannot buy from any other shareholder. You can buy only from the company.
So original stocks only.
Yeah.
Company issued, you cannot be buying them in the market.
So if you hold this investment for 3 years, so you can get 50% exclusion in your capital gain. You are not going to pay any capital gain tax on your 50% of your gain for 3 years. If you hold it for 4 years, the exclusion is 75%. So you are going to pay only on 25% of your capital gain. And if you hold it for 5 years or more, it will be 100% excluded. You are not going to pay any tax. But there is a limit. So limit is greater of 15 million or 10 times of your investment basis per issuer.
So QSBS, if you see the name, qualified means the business has to be certain type of business. What businesses do not qualify? SSTB, doctors, accountants, attorneys, where people are selling their time, where they are providing the services themselves. Those businesses do not qualify. Pharmacy does qualify as long as more than 80% of your business is retail business, meaning not the short business. So you can have non-qualified component up to 20%. That's the qualified portion. The idea is I do not want to pay capital gain taxes. I see you can convert my 37% to 27%, but I don't want to pay 20%. What can I do to not pay 20% with the capital gain taxes? I have assets with built-in gain, lot of gains. I have this asset which is growing in value. And not only you can buy the stocks by investing money, you can invest assets. They say, going back to pharmacy, you can have this pharmacy converted into C Corp. Create a C Corp which take over the pharmacy. So now you have tax issued to you based on the asset that you contributed. So when this pharmacy grows in value, if you can follow certain rules, 3 years, 4 years, 5 years. So a lot of people use QSBS with exit strategy. When they know that in 3 years, 4 years, 5 years, let's say size CP services is worth $100,000. My cost base is zero. If I sell it, I have to pay tax. I want to retire in 5 years. I form a C corporation which takes over a size CP services. So after 5 years, on the growth from 100,000 till then, I don't have to pay any taxes on the capital growth, on the not even 20% taxes. So a lot of people use QSBS from an exit strategy perspective. Qualified, not every business qualify. Some business qualify. A small business is defined as under 75 million. It used to be 50. If you go on Google, you will see 50 million a few places because prior to OBBA, it used to be 50. Now they increased to that. In some cases, you will see the gain is limited to 10 million, not 15 million. Because prior to OBBA, it used to be 10 million.
So there is one case study. Like suppose if I invested 2 million in qualified small business, I hold it for 6 years. And after 6 years, I sold it for 25 million. Since my holding period is 6 years, I can get 100% exclusion. But if you see, my capital gain would be 23 million. Exclusion limit either 15 million, greater of 15 million, or 10 times of my investment basis. So if you see, my basis is 20 million. So greater of that 20 million, I can get excluded from my capital gain.
So I invested 2 million. So the basis is 2 million. The initial value when I was converting to C Corp was 2 million. That's why I have 2 multiplied by 10, I get 20 million over here. So in this example, if you keep this pharmacy, which currently valued 2 million, you keep it there in the C Corp for 6 years and then sell it for 25 million, you only pay tax at 3 million.